here's what we're looking for. So this is the pound dollar. If you guys have been following my trading blog video, or really actually, we started looking at this pair last week in the Forex market preview. We followed it up in the syndicate earlier on this week. And then I did a trading blog video this week as well, talking about how I missed the shorting opportunity. Well, yesterday we had a whole bunch of mixed emotions coming out about the pound. We saw it topple in the beginning of the day with kind of the Brexit negotiations stalling. And then you can see we V-bottomed and retraced all of the losses that were made earlier in the day. And overnight, I saw that we ended up putting in a higher high, higher close. And that higher high, higher close comes above that level of structure that I pointed out to you in last week's Forex market preview, which changes the mindset of what I'm looking for. And I think traders sometimes get stuck for too long in the same mindset. They do their analysis and everything says short, 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 short. And no matter what happens in the market, they have that confirmation bias. They become so stubborn in that way of thinking that they have to be right. A real trader is able to adjust. So, it's the same thing we do in our rules of reading a price chart. If then, if then, if then. We look at the chart. If this happens, then we look for that. If this happens, then we think like this. So my if-then thought process started firing off when we saw that higher high, higher close. If price action breaks and closes above previous structure, then expect continue movement bullish. If price retraces, then look for a move back to previous structure lows. And that's exactly what we did. You can see we came back here. We put in a beautiful rejection candle. I'd actually love to see a little bit more of a probe of this area, but a good hold at this level. And I knew this was an opportunity where we could see some bullish movement directly after this. The best trading opportunities typically don't last, and that's the feeling I had about this. So what I did was I went down to an alternative time frame. I really love the range bar charts. Before I started coaching others, I would spend a lot of time on the range bar charts because you get some very, very, very good clues, or you get a much, in my opinion, you get a much better picture at price movement, and it allows you to really take advantage of some opportunities that aren't necessarily there on the different time frames. Now, I went to a 13 range bar chart because this was a higher time frame. A 13 range for me is more like an hourly chart, so this would be the equivalent of the hourly chart. And instead of seeing this single candle that comes down and gets rejected, right, in real time, right, you can see price action came down, then we came back up. In real time, as I was watching this towards the close of the hour, because, funny things happen towards the close of the hour, we actually saw price action come down. The bears are pushing down. The bulls tried to push up. The bears pushed down again, giving us a double bottom right at our previous DSR level. And that was an entry reason for me. I got in a little bit late. Again, I'm up here. I got in a little bit late. And that's the thing about the range bars. We never know when these candles are going to form. This black candle right here, for example, is at 5:53. This candle right here is at 5:54, so 1 minute later. And then this next candle is at 6 o'clock, so 6 minutes later. So as I was going about my daily routine, I kind of lost track of this and got in a little bit late, but still within the rules of the trade. So I got involved in this. We'll see how it goes. Again, in the syndicate, I'm looking for a move just up to our 133.18 levels. That's a very conservative entry. I haven't measured out my full targets for this trade on my personal account, but I know the next level I'll be looking for is going to be right up here at about 133.50s. And then I'll keep one on the board for a retest of our previous highs right around here, our 134.50s. As you can see, this is the level, this is the level that we consolidated with, or consolidated at, before breaking below. Probably do a much better job of drawing this on, but it's early in the morning. I don't care. It's Friday. And you can see after we broke this level of support, it became resistance right here. It became resistance right here. So that's going to be a level that's going to be on my radar as well. So we'll see how this trade pans out, but I wanted to share it with you guys because I thought it was a cool opportunity. I'll actually adjust this a little bit so we can see. I don't have screen capture on my other system here. I only have it on the main one. So I actually adjust this a little bit so you can actually see what it looks like as we do follow through targets as well. Syndicate members, we're still taking the full thing off. We're just going to do this for video purposes. So see you guys a little bit later. Hope you enjoyed the explanation of this trade. 133.15s, and then some higher level targets as well. Price action, you can see we made it about halfway across, or 3/4 of the way across this move. And now we started retracing, right? And a technique that we can use, a strategy for some, if we miss a double bottom or double top, or if we're looking for a more conservative entry, would be it's on the website. We teach it for free. Tom just wrote it in. 26.18. Yeah. So you can take your Fibonacci retracement from your swing low right here to your swing high. Look for that 618 Fibonacci retracement. That's going to be at 132.67. And here's your zone. Here's your kill zone, or as they say on TV, the kill zone for your 26.18 entry. If you're looking to get involved in this trade. We're going to wait from here. We're close to hitting targets here, so we'll see if we can hit targets on here. But yeah, news trading real quick. We'll wait for War Room. It's a decision that you're going to have to make in your trading. It's a decision that you're going to have to make whether you avoid news at all. I know Charles, for example, when he was running the War Room and in his syndicate trading, Charles avoids no news. He doesn't care. He didn't avoid it in his testing. He's not going to avoid it in real life. I know traders that avoid every single news event. It's a decision that you'll have to make in your trading. Do you want to avoid some? Do you want to avoid all? Do you want to avoid none? And none of those decisions are wrong, guys. It's all personal preference. For me, I only try to avoid the news events where we're going to get kind of the emotional reactions from it. So stuff that has the whipsaw effect, meaning where, President Draghi is speaking and we know the market may bounce up and down, then up and down, then left and right, stuff like that. I'm not too concerned with the one directional market or one directional movement from the news, more like the press conference stuff where it goes crazy, or like the non-farms, because we know what the non-farms is. There we go. Target one's achieved, or I guess normal targets achieved, 46 pips on there. So let's add that to the syndicate. I'm going to roll these stops up to break even. I've been recording this trade, so I want to show an example of just taking extended targets here. So I'll put those secondary targets on later. We'll come back and talk about that. But winner, chicken dinner, good trade. How about that? Short and sweet, simple, pretty simple stuff, right, guys?